Welcome to the Captain's Blog. I'm David McDonough, Senior Vice President and founder of Flagship Wealth, powered by Trilogy. On this blog, we try to take what's unnecessarily complicated out there on Wall Street and sometimes D.C. and make it understandable to you out on Main Street. All quiet on the tariff in the tweet front last week. Market finished flat in anticipation of the meeting between China and U.S. in Switzerland. Did that benefit the market? Was there a major breakthrough? Here's your week in review. Breakthrough? Yes, major breakthrough, where it came to the talks between the U.S. and China. There was an agreement, a 90-day delay on tariffs. The current tariffs dropped from 145% to 30%. The market rallied on that news. We also had what's called benign inflation numbers, actually below expectations. And remember, the Fed last week met and said this: yes, inflation is coming down, but not quick enough for us to lower interest rates. Well, these numbers were below expectations, and now the Fed is back on the table where it comes to anticipated cuts moving forward. How does that benefit you? Again, where it comes to your credit card, your auto loan, equity lines will come down. More money in your pocket. And lastly, the president is making deals where it comes to Saudi Arabia and the Middle East, especially for the chip stocks. The same chip stocks that were buried in March and April. Nobody wanted them then, but now they're back to those levels, reaching all-time highs, and now you in Main Street wants them again. No FOMO where it comes to investing in Flagship Nation. So again, as of this print, market up 4% for the week, flat for the year, up 20% from that low we just saw 5 weeks ago. And here's what to look for next week. There's a tax bill down on Capitol Hill. We'll see if the circus is still in town, or they can make some of these tax cuts, permanent. The market likes certainty. Deregulation, deals, tariff deals being announced. A lot of positivity, in my opinion. But here's the issue. The market is trading at the higher end of the trading range. What do I mean? I mean, the majority of this good news and the projected good news is now in the stock market. Pay attention to these headlines and don't invest on them. I digress. 3-4 weeks ago when the market tanked, experts out there lowered their price targets where it came to the stock market and raised the probability that there would be a recession. Now that the market is back to the levels not seen since the beginning of the year, they're raising their targets and they're lowering the probabilities of recessions. Why do I mention that? Again, when the market's tanking, the experts out there to tell you to buy gold. And when it's at an all-time high, they're telling you to buy stock. You're already there if you're out there in Flagship Nation. Stay diversified and use this weekend as an opportunity to see how you felt 3 or 4 weeks ago and whether or not you need to change your portfolio because of your risk tolerance. And here's your personal finance tip of the week. The question of the week comes from Chris out in California. Dave, each and every week you mention about reallocating and maybe getting more aggressive and buying on dips. If I have 100% of my money in the stock market, what can I do? Chris, great question. What we talked about during our review this week is this. There are certain positions in your portfolio that are less aggressive. You take those positions on a dip and you add it to more aggressive positions. And a few weeks ago, that was the growth side of the market. Maybe it was the small to mid side of the market. But this is what we do know. Trying to chase those names and those sectors, say it like after me, folks, is fool's gold. We need to be there before Main Street gets there. Consult your local financial advisor for more details. So thanks again for checking in. We'll see you next week on the Captain's Blog.